Hey everyone, how many of you remember hearing about Bank of America Corporation turning over private customer data to federal authorities on people who hadn't even been accused of any crime? It was all part of an effort to help hunt for so-called extremists in cooperation with the government right after January 6th. Well, what if I told you that you actually have the power to be your own bank and be free from these woke warriors once and for all? Well, that's exactly what our guest today is going to show us. I want to welcome back Michael Lush. Michael is the founder and CEO of Replace Your Mortgage. And as you'll find out, he is very, very passionate about giving you the tools you need to be financially free from all things woke. So Michael, great to have you back here. Thank you so much for being with us again.
Yeah, thanks for having me. I appreciate it. Yeah, it's funny when you were bringing up Bank of America. I was in Charlotte, North Carolina, living at the time. Actually, I was starting off my banking career in Charlotte, North Carolina, and it was the local talk of the town. It wasn't something that made headline news back in the day. This was 2001, 2002. But Bank of America never wanted to buy Countrywide. So you talk about how you got the banks that are turning over your personal data to the government. So obviously they're not your friend or in your back pocket. And the government is somebody you always have to keep an eye on. That's why we have the republic that we have. So back in 2001, 2002, Bank of America never wanted to buy Countrywide. And it was actually Kenneth Lewis at the time was the CEO of Bank of America, told them, he's like, look, I don't want to buy Countrywide because Countrywide was going under. Bank of America was the largest bank at the time. And the government all but stuck a gun to his head and said, no, you guys need to buy Countrywide. So they buy, and the reason why he did not want to buy Countrywide was Countrywide had tons of toxic paper on their balance sheet. So Bank of America did not want to own that. And I think that, Ken Lewis kind of saw around the curve and knew what was coming. So shortly after Bank of America bought Countrywide, Bank of America was fined by the federal government in the tune of, I think, $2 billion, pretty close to $2 billion. So,
wow.
Yeah, you talk about a pretty profitable racket that they've got going on.
Well, yeah. Explain for us how all these practices relate to this notion of a central bank. I don't know how many people actually understand the creation of central banks and around the world, and how they really radically affect our nation and the finances, the way we do banking and the like. What is a central bank? How does Bank of America relate to that and the like?
Yeah, so central banks actually are the backstop of your community banks and credit unions. So, the Federal Reserve is a central bank. And I want to remind the listeners that the Federal Reserve is neither federal nor is it a reserve. It's not part of our government. They have complete autonomy. They also are not a reserve. They really don't have all the cash. They just have the ability to effectuate our monetary policy. And so what they do for banks is give the banks the ability to execute fractional reserve lending. So for every dollar you put in a bank can lend out $10, as opposed to prior to a central bank. Banks, if they had $1 in deposits, then that's the amount that they could lend out. Now they're lending out 10 times the amount, which in a lot of cases, if you read the legalese of a mortgage, it's not even legal of what they're doing. They should not be, because if they have to securitize your loan against something of real value, but if they're lending out 10 times what they actually have in deposits, then where's their security? And they're legally supposed to have that, but in some cases they don't. And there have been lawsuits where folks have fought that and actually gotten their home free and clear because they proved that they were loaned money that was never secured by the bank to begin with. But back to your question of the central banks, that's what central banks do. Now, this started hundreds of years ago. One of the more popular families was the Rothschilds that started the central banks. You have the Oppenheimers, the Schiffs, and the Warburgs. Those are the families that really created the central banks. And what's ironic, if you ask me a question, well, what countries have a central bank? Mm-hmm. It's actually easier to answer what countries don't have a central bank. Huh. So, for example, this was, this has probably changed just a tad over the last 20 years, but up until 2000, 2005, there's a very small list of very small list of countries that did not have a central bank. Now, once I tell you this list, You tell me what they all have in common. Number one, Iraq. Two, Sudan. Three, Libya. Four, Cuba. Five, North Korea. Six, Iran. Number seven, Afghanistan.
Oh, they're all our friends.
Yeah. It's all the countries that we would love to go to war with,
Right.
and have gone to war with.
Right.
It was the father of the Rothschilds that made the comment. He says, I care not what the policies or politics are of a country, as long as I control their money supply.
Right.
Which is true. You control the money, you control everything. You control votes. You can even control the ideology of a country if you control the money supply. So that is one of the main reasons of a central bank, is to control our monetary policy, which will also, in the long run, control our ideology as well.
Wow.
I mean, you look at things like certain social media platforms, things that you can or cannot say. I have a YouTube channel. I have a Facebook profile. I have a Facebook page and things of that nature. To a certain extent, you almost have to play with inside of their sandbox as a business, because you have to be, woke. You're participating in part of that cancel culture. And if you get outside of what they really want you to think and how they really want you to act, then the repercussions could be detrimental to your business.
That's right. That's right. Absolutely. My. So what's the solution to all this? How can we be free from wokeness and all this government overreach when it comes to our banking?
One is to decide that you don't have to participate, and we really don't. So, you talked about in the beginning, creating your own bank. It sounds extremely lucrative, and it can be for you, but it also sounds very expensive for the average American. But it doesn't have to be. Creating your own bank and not participating with a bank, like, you don't have to have a checking account. You don't have to have a mortgage to finance real estate. You can actually create your own bank and funnel your income into your own bank and start financing everything about your life, including real estate, through your own bank. So if you don't participate, and we do that with the masses, then we can actually affect some type of real change in this country. But until we figure that out, and this isn't something that's a secret, this is something the wealthy has done for a long time. I mean, you take a look at just our taxation strategies in this country. Like, for instance, when it comes to lending guidelines, okay, if you and I were to go get a loan, what do we have to do to get a loan or a mortgage from a bank? Well, we have to prove our income, right? Well, how do you prove your income? Well, it's not through bank statements. You and I are both entrepreneurs. So, we have bank statements that could show one number. Then we got to go tell the IRS of every single dollar that we've ever made. But keep in mind, as business owners, what else are we doing? We're employing people. We pay workman's comp. We pay, taxes as far as franchise tax and excise tax. We're getting taxed to death as entrepreneurs, but yet we're creating tax revenue by employing all these people, right?
Right.
But yet then when we go to borrow money, we have to prove to the bank that we have the ability to repay. And what is the number one way you prove the ability to repay via bank and underwriting? It's tax returns. Okay. So the reason why I say there's a separation between the elitists and the average Joes is the elitists don't have to do that. They have special programs for them, bank margin loans and things of that nature. Well, they don't have to prove based on tax returns. They can prove based on bank statements. However, you and I, we have to prove it based on tax returns. So if we don't tell the IRS how much money we make, and then we try to turn around and tell the bank how much money we make, it's a no-go. It has to be the same song and dance. So they're participating together. So that's why I say the middle class and the lower class are getting taxed far more than the upper class. But that's okay. It's not that I'm saying go tax them more. I'm just saying, let us play by the same rules.
Right. Yeah. One thing that's hot, and this is exactly what playing into what you're talking about here, is this notion of infinite banking. Can you give us a sense of what is infinite banking? It sounds, well, lovely. If I could tap into an infinite source of income, that'd be lovely. But yeah, give us a sense of that and how the advantage it has over sort of the traditional central banking that most people participate in.
Yep. So actually, it's insurance policies. It's actually whole life insurance policies. So you can funnel your income, not all of it. This is why I've also have Replace Your Mortgage, which teaches the benefits and best practices of utilizing a first lien position home equity line of credit, because they both are great tools of preserving cash and I wouldn't say eliminating, but limiting taxation. Okay, so infinite banking concepts is there are 4 tax codes that eliminate insurance from taxation. So you can actually funnel your money into a tax, or not, I would say a tax-free, but to a certain degree, a tax-deferred strategy insurance policy, which is a whole life policy. For the most part, there are some other products out there, but you know, they all have their advantages and disadvantages. But you have to think about where we're at today, because when you talk about 401ks and IRAs, those are tax deferred plans. They're not tax-free plans. People think that they're tax-free because we're putting our money in right now before taxes are coming out, right? So then they think that they're tax-free plans. They're not tax-free, they're tax deferred. So you're either in one of 2 camps. You're either in the camp that you think the taxes are going up, and if you do, then why not go ahead and pay your taxes now at the lowest tax bracket that we've been in several decades, and then not have to pay taxes later on. Or you're in the camp of, well, taxes are going to go down. I'm not in that camp. I think the taxes are going to go up. Look at the administration that's in office now. All they want to do is tax everybody. Capital gains tax, tax the wealthy, tax everybody. They said that they wouldn't tax anybody that made over 400,000. That's not true. Everybody's getting taxed. So I'm not in that camp that thinks the taxes are going to go down. I'm in the camp that I know the taxes are going to go up. So why not funnel my money into something that can never be touched via taxes again? And then what you do is you build cash value in these policies. So not only do you have a death benefit, you also have a living benefit. And what you do is you actually make a loan to yourself. So there are 4 parties to every banking transaction. There's the bank owner, the banker, the borrower, and the depositor. Those are the 4 people of every bank transaction. And which ones do you think are the most important? And that's a trick question. The answer is all of them. So here's the cool thing about infinite banking concepts. If you want to make a loan to yourself or anyone else, or to, buy real estate or buy a car, guess who dictates the terms, the policies, the payback of that loan? You do. You're the bank. And here's the key though. Most people don't know how to think like a bank. So if you're lending money out of your own policy, either to yourself or somebody else, how much interest should you charge yourself? If you think like a consumer, the answer is going to be as little as possible. But if you think like a banker, and bankers are rich, then you want to charge as much as possible, because who gets the interest? You do, tax-free.
Wow.
Yeah.
Wow. So you can borrow. So if you have $100,000 cash and a whole life insurance and you're borrowing 50, you're still getting interest appreciation on the whole 100,000.
The whole 100. It's a very good point. I'm glad you brought that up. So you're not borrowing from, you're borrowing against your policy. So if you never want to pay it back, that's okay. You don't have to pay it back. You should. If you think like a banker and you want to replenish your cash value and grow it and things of that nature, then yeah, you should pay it back. And not only should you pay it back, you should pay it back with an exorbitant amount of interest.
Right.
Because you're the bank, right?
Right.
But technically you don't have to, because what's the collateral? Your life. If you die, then your trust gets everything back minus what you've borrowed against.
Right. Right. And it's something that can be passed down as well, as I understand it, too, to leave an inheritance. Yeah.
Correct.
It is so absolutely fascinating. It's very similar to real estate, isn't it? Is that kind of the closest sort of analogy to it? You can borrow on your home, you can refinance and so forth, but you're still making the appreciation on the whole worth of the house.
Correct, to a certain degree. But keep in mind, when you're borrowing on real estate, you're borrowing from a bank. So that's a third party that you're paying interest to.
Right.
That really has their thumb on you now, right?
Right.
So, for instance, a lot of these people over the last year, they went into this forbearance program, right? Where they said, okay, well, you don't have to make a payment for the next 4 months. However, on month 4, guess what you got to do? You got to make all those payments back plus that month. Well, if these people truly needed forbearance, and again, that's not everyone. There are some other programs where you can continue to kick the can down the road and get it pushed onto the back end of the loan, but that's not everyone, right? So if you could not afford your monthly payment and you truly needed forbearance, do you think in month 4 you've actually taken what your mortgage payment, let's say it's $1,200 a month. Do you think that those people actually took their $1,200 and socked it in the checking and savings account, did not touch it until month 4 to let it accumulate, and then just said, oh, here's everything. Thanks for giving me a pass those last 4 months. No. So
Right.
what happens? It's
Right.
time to get out. So
Right.
as soon as you miss that first payment, you're now in default, because the law says that 120 days late, you're in default.
Right.
So now they can foreclose on you and take your home when it's at its highest appreciation. So no, I mean, it to a certain degree, it is like real estate, but if you are the bank, would you do that to yourself? Do you
Right.
kick your own family out of their home? Do you foreclose on yourself? No, of course you don't. You do whatever you want. You're the
I
bank.
I don't know, Michael. I got 4 kids, they can get pretty
Yeah,
annoying. I
yeah. At some point, they do need to get kicked out.
I'll,
I
I'll make
agree.
I'll offer them as collateral or something like that. I don't know.
Right.
That this is fascinating. Just in case people don't know too, you talk about whole life insurance.
Mhm.
Can you just what's the distinction between, say, like whole life versus term?
Yeah. So whole life builds cash value. If you listen to Dave Ramsey, it is more expensive. It has a higher premium. And there's different caveats to it, paid up additions and things of that nature, and riders and things that come along with it. But whole life is for the eternity of your life, right? So
Hmm.
until you die, you're buying insurance based on that.
Hmm.
Term is, let's say I'm 42 years old, I want to buy a 20-year term. So that means I'm paying a premium for 20 years. I don't build cash value. And at the age of 62, if nothing happens,
Right.
then I've technically wasted that money. So
You're
again,
right.
there's two different camps here. But with whole life, you have the ability to, it's a vessel to store cash. And there is one thing that Dave Ramsey does say that is correct. It's a horrible investment. It is, because you're getting basically 4 to 5% compounding interest. Now, we'll say this, it's uninterrupted compounding interest. But I'm not in it for 4 to 5%. I am in it as a vessel to store cash. And again,
Right.
I can only store some of my cash into it because of tax laws and things. This was something back prior to 1984 that all the uber wealthy did. They actually took all their money and socked it into an insurance policy, a whole life insurance policy. That way they could avoid taxes. In 1984, they changed that. They created what's called a modified endowment contract, so they can say, okay, only a percentage of your yearly income can you put in there. That's why I'm a big fan of a home equity line of credit. These are
Right.
two vessels to store cash.
Right.
And then from there, what makes it a good investment is what I do with it from that point forward. I can lend it out, like for instance, the event that we were talking about earlier, I can lend it out, charge 10%. Well, if my cost of funds is 4%, but I lend it out at 10%, now I've made 150% rate of return on my money. I'm not getting that at the Dow. I'm not getting that in S&P. So it's what you do with it after it's in that vessel of storing cash. And keep in mind, it's in there tax-free, and it's also compounding for you uninterrupted. And when I say uninterrupted, it's not tied to the market. So if the market goes down, you still get your monthly dividend. And we're talking about insurance companies that have been around for almost 200 years and haven't missed a dividend payment in 200 years.
Wow. You mentioned Dave Ramsey just in closing. Yeah, he's not a big fan of this stuff. What does he get wrong? What is Ramsey missing here?
The bigger picture.
Yeah.
He's looking at it through a very narrow lens, where he looks at it as just an investment of, why would you invest in something that has a 4 or 5% rate of return?
Mm-hmm. And
if you only look at it from that lens, I agree. 4 and 5% in this market, you could get 12, 20. Now, his mythical 12% mutual fund, it's mythical. It's never happened.
Right.
I mean, here's the thing. They keep track of these things ever since 1931, I believe
Right.
it is when they started tracking mutual funds. There's never been one.
Right. You're not going to beat the index. That's right. Yeah.
But, I think that's where he's missing the boat, is he's not looking at the bigger picture of what people can actually do when it's in there to make it an investment. If I want to take my cash value and lend it to another business and charge them 10%, then I get 150% rate of return on my money. That's a great investment. That beats the 12% mutual fund all day long. That's the piece that he's missing.
Well, excellent. Can people contact you if they want to get some more information on this and see if you can help and guide them in this process?
Absolutely. So if you just go to our website, replaceyourmortgage.com, there's one, you can download a book. We have a free book that will email over to you or send to you. So you get the book, read the book. If you want more information, you go back to the website, book a phone call with us. There's nowhere on there where we're asking for donations or for you to pay us. you have to have a consultation with us. So for everyone gets a free 45-minute consultation. We'll look at your situation, look at your numbers, and see if this makes sense for you. And it, for some people it doesn't, and that's okay. But at least you're going to leave the conversation with a lot more knowledge and a lot more value than you came into it with.
Absolutely. It's wonderful. And yeah, we'll have a link down below as well that you can just click on and go straight to Michael's website. Michael Lush, everyone. Mike, thanks so much for being with us. I have to say, you're a pretty amazing man. I'm starting. I have, when I first met you, I'm like, this guy, I mean, he's got all these numbers and these concepts. I got to follow it. This is hard. And the more you're on, I'm like, hey, I'm tracking with you now. I'm getting this. You're a good teacher. I really appreciate that.
I appreciate that. Thank you.
Absolutely. And you're helping patriots out of the trap of globalist banking into financial independence and freedom. It's absolutely wonderful. So thank you, Michael. Thanks so much for being back
with us.
Thank you.
Appreciate it.
You bet.
Take care. God bless, gang.